Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 195 of the AJ Brown Show. AJ, there is blood in the streets. We are so grateful to have you here as our advisor. My name is Cyprian Francis, and as you can see, Mr. Cool Guy, AJ Brown, joining us today. August 1st, summer doldrums.
Yeah.
What is
Halfway
that?
through. Well, yes. This week has been anything but summer doldrums. From the beginning of the week, where we started with, will we get a trade deal with China? We got one on Sunday with Europe. We've got one in South Korea and Japan are on board. So it was talking about that. Then we got into things like, GDP showing that the economy was still strong, at least the advanced numbers for quarter two. Then we got into, Jerome Powell. We got our personal consumption expenditures numbers yesterday. And then, of course, today we got our employment situation. Everybody's all over let's not forget tariff deadlines, August 1st, today.
Yeah, we'll
So,
see what truth posts come out with what extensions, because that seems to be a trend. But maybe let's start earlier in the week before we
yep.
touch on today's employment number, which is really, really big. GDP was good, right? Economy in decent shape from that perspective.
Yeah. So GDP, well, can I go even a day earlier? So a day
Let's do
earlier,
it.
you guys know that I like to look at my consumer confidence numbers because I've been following consumer confidence. And, the US is a consumer driven market, at least it has been for the last, say, 20 years. So I like to pay attention to those numbers, and those numbers came in better. So it began the story that we've got, now I think you guys remember that I've been following consumer confidence for, since the late 90s, and it's always been between about 100 and 110. And then just this, April with the whole tariff, liberation day and things like that, it dropped down into the 80s. But every month, reliably, it's been moving back up. And what we take from that is that the consumer here in the US is strong, which is good because that means the economy is strong. The other thing that I look at that a lot of people don't look at is the job opening and labor turnover survey that comes out every month. Now, folks, this is kind of a leading indicator, but it's showing that the job market is quite tight. And I'm just, for those of you out there who have dreams of, becoming a full-time investor, my advice is strong, which is make sure you've established yourself and you've got your portfolio in action and you've grown it to a certain point that it can sustain your minimum needs before abandoning ship like I did in 2005. A lot of people are like, I want to be like you in 2005. Don't forget, I started my options trading journey in 1997 and I worked for 8 years while maintaining my day job, funding my portfolio till I got to a point in 2005 that I could fire my boss. So don't just come into this, investing brand new and say, I'm going to abandon ship, especially right now. The job opening labor turnover survey report is saying you're not going to find another job. So don't abandon ship. Do what I did and keep funding your portfolio and learn how to be an investor on the side until your portfolio gets to a certain size, because the reports don't lie, right? So that was a little bit of a tangent sip, but I wanted to make sure folks, play the reality game, not the dream game.
And I've just a quick question on that. Is
Yeah.
could the immigration policy start having some trickle into that and even today's employment number?
I gotta be honest with you. I've been looking at that just on the side because I'm just curious. The way that the immigration policy is being played out, especially on the media, especially with these people with their masks on invading Home Depot parking lots and stuff like that. Um, the way that that's playing out is quite visible and quite kind of shocking. But to be honest, under Obama and under Biden, more people by this time in the year had been brought back to their countries than under Trump. It's just that the way it was done, under Obama, it was just kind of like done behind the scenes, and it wasn't done in this like approach that we're taking now, which is a very visible, approach. So I don't know if the numbers are actually gonna be affected because the numbers are actually quite low. It's just that the numbers that are being, exported are done in a way that's quite visible, but the numbers aren't where they had been under previous administrations. So I'm not sure we'd
Yeah,
actually see that trickle through, Sip.
yeah, and we'll see. I mean, we'll go over today's employment numbers, but GDP
Strong.
is telling us that the economy on a quarterly basis is not
No,
reversing.
although remember these numbers, this organization in the government that looks at the GDP numbers, it's always in the past, right? This is the advanced report. So the way that the GDP numbers report is the economists go in and they look at the data first really quickly and they give us the advanced report, right? And that's what we got on Wednesday. Then they're going to come back a month later after dissecting the data and maybe revise all these numbers and give us what's called the preliminary report. And then a month after that, they're going to really refine it and they're going to lock it in and give us the final report. So this is the advanced report for quarter 2. So we're talking about starting April through June, right? And so the advanced report, yes, April through June, things were still pretty strong. And so going into this with the GDP being strong, people were like, okay, our economy is quite resilient. What's that going to mean with respect to interest rates? So on Tuesday evening, people were like, I mean, on Wednesday evening, especially after Jerome Powell didn't give any hints in his, press conference of any sort of rate drops, people were like, maybe we're not going to get any sort of rate drop, right? And combined with that, Sip, what we got on Thursday, which was the Fed's favorite numbers, the personal income and outlays, the numbers on Thursday. So you have this strong economy and you also have the inflation number creeping up. So for folks that are kind of watching the numbers, if you look at this report every month and you see that this right here, this one right here, the core personal consumption expenditures price index monthly, if that number is greater than 0.2, you know that the Fed is now on edge looking at inflation. And so it popped in at 0.3. It popped in 0.3 across the board. And so there were rumors yesterday that, hey, in the economy's strong, inflation's perhaps ticking up. We don't know the effect of tariffs. So if you look at what investors thought the Fed was going to do in September, well, this is today. Things changed overnight. But yesterday, one day ago, there was only, the numbers were flip-flopped. One day ago, it was 37% thought that there might be a rate drop in September, but 62% were like, man, GDP's strong, inflation's ticking up. There's no reason why the Fed would want to drop interest rates. So you see that 62.3, 37.1. But right now, you can see the numbers have flip-flopped. And we can look at the bar graph. After this morning's employment report, everybody's changed their tune yet again. So it's like flip-flop. From Monday to Tuesday, it was one way. Wednesday to Thursday, it was another way. Now today, it's back to where it was on Monday and Tuesday. 78.7% say it's going to drop. And why? Because this morning the employment numbers came out. Let's take a look.
Can I ask a question before we dig into
Yeah,
those
yeah, yeah.
before we dig into the
Yeah, yeah,
employment
yeah.
numbers? So So from the Feds, from Powell's statement, which I got to give him credit. This man is stone cold, right? Like for President Trump to just like show up and go in front of the cameras and really call him out. He's sticking to his principles, but the big conversation was the two dissents in the voting, which kind of raised the question of, are they on the same page? And I think even today from these numbers, they're like, we might get a 50% cut in September. So
I don't know about that.
From Wednesday, like with the dissents, what is your takeaway from not all of the board governors being on the same page? And they were saying that hasn't happened since like the 90s.
You're right. That's very rare that the Fed governors are in dissent. And the two Fed governors that dissented are Trump appointees. And one of them is the one that Trump will more than likely tap on the shoulder to be Jerome Powell's replacement next year. And it may be, we've talked about it in previous shows that Trump may actually tap him on the shoulder early, which then would make Jerome Powell kind of a lame duck Fed president. So you're almost wondering, just like we're seeing it in different parts of the government, you're almost wondering if the Fed, which is not supposed to be politicized, is becoming politicized. So that's the conspiracy theory. But, Jerome Powell, I think, addressed it very, very well in saying, hey, we love it when there's good conversations. It means that, the policy is being figured out. And so these two Fed presidents did dissent, saying that maybe we should cut rates. The rest of them did not. Jerome Powell did not. They decided to go with majority vote, as they always do. But yes, that's unprecedented that, there'd be a couple of folks dissenting on the vote. The key, though, is we got to look at the Fed's mandate. Control inflation, but at the same time, make sure that the labor force is in act. And, when we look at today's employment numbers, I mean, not only did they come in well below expectation, look at that, 73,000 jobs created in July instead of the expected 110. But look at what happened in June. They went back and they looked back at the numbers in June, and they were like, oh, you know how we reported that 147,000 jobs were created? Turns out it was only 14,000 jobs were created in June.
That's a big difference.
So, and that's why we're seeing the market do what the market's doing right now, right? That's a big difference. Plus unemployment, a different survey altogether, ticking up. Private payrolls, they thought at first last month that 74,000 jobs were created. Turns out only 3,000 jobs were created. Expecting 100,000 in the private sector, only 83,000. So this employment report was a kick in the teeth, which is why, if employment, and I'll be honest, the JOLT survey was kind of hinting at it, right? It's been hinting at it for a while. So the employment situation had people turn, full on today and say, oh my gosh, the Fed does need to lower rates because they need to make sure that they keep the people employed, right?
And I guess the question on the dual mandate is, what's going to be more of a important factor, the inflation numbers or the employment numbers? And I think from today, it seems like employment's moving against us faster than inflation's moving up on us.
Well, and as long as the job market was strong, the Fed could say, hey, let's focus on inflation. Since inflation's ticking up, we need to go ahead. No Fed president likes to deal with rising inflation and at the same time dropping employment. That's like the worst, because one medicine that the Fed could apply is going to adversely affect the other and vice versa. But the Fed tends to go to saving the employment numbers. So that's why all of a sudden, you take a look at what investors think the Fed is going to do in September. And yesterday, when everybody thought that the economy was strong and inflation was ticking up, they were saying, well, if inflation's ticking up and we don't know how tariffs are going to have an effect on the market in the long term, the Fed is probably going to keep rates where they are. Well, today, employment numbers really came in the toilet. And so the expectation is the Fed is going to have to drop rates in September.
And we're going to get one more employment number
True.
before that, right?
True. We'll get one more. We'll get, I believe, what was this one? This one was June's.
June.
No, this was July's. So we'll get August's employment reports. I mean, the other thing, though, is summertime is not, I wonder if the Fed is going to have to factor in seasonality. I think the other reason, because I'm always looking look at the VIX. We could talk about the VIX trade soon, but the VIX has jumped on. Investors came in this morning buying all sorts of options in order to protect their investments, and even the SPX. The name of the game today is risk off. See if this comes up really quick.
Yeah, and we should probably go over that because, for the past 3 weeks or so, we've been saying, hey, there may be a top coming. We don't really know what's going to be the driver, but there is some consolidation happening.
You betcha.
Today, even a little bit yesterday, it seems like was the first, I don't know, coming off. Like if we look, just today and yesterday, in terms of pullbacks, those are probably the two largest in over 2 months.
Yesterday evening, we got our signal that a top had been found. And so whenever we get one of these red arrow signals that, this is the indicator package folks can download from us for free. July 28th was our highest close. So July 28th was the top, and we confirmed it yesterday evening. And sure enough, we're on our way down. Here, let me overlay some of our analysis drawings here on the S&P.
And what we didn't even cover so far this week that was major news was the Microsoft and Meta earnings, which we'll go over some of the earnings plays later in the show. But looking at your arrow there, basically what took us up there was that after hours Meta earnings where they were up like 11% after hours and just was rocking and rolling. And then the next day, it's just like, well, here we got economic news.
Yes, the three other things that we didn't talk about, trade deals. China and U.S. are still negotiating. We expect their deadline to get pushed, but already, today, from what I'm reading on Truth Social, what I'm reading on X, the Canadian tariffs that aren't under the North America, not the NAFTA. NAFTA's gone. Trump, during his first term, renegotiated the deal between Canada and Mexico. Anything that's not clearly described in that deal all of a sudden just went up to, I believe it's 35% tariffs today. So we've got a whole tariff deadline affecting especially some of our biggest trading partners, Mexico and Canada. We've also got the postponement of some trade deals, and then earnings is like you talked about. Microsoft and Meta kicked it, but some of the other companies like United Health, UPS, UPS is a good bellwether of, they're delivering stuff. They're delivering goods that consumers buy, right? And their numbers were in the toilet this week. So, and United Health, the insurance industry, which is, a big money maker most of the time, United Health got hammered. So, yeah, there's some big winners. I mean, Microsoft, I think, isn't Microsoft now the second $1 trillion company?
They're like $4 trillion companies now. It's crazy, and it goes back to something we talked about a lot in the past, and that's the drivers of the overall indexes being led by a few names and not being the overall market, which maybe started to crack a little bit yesterday. But digging back into your signal to the downside, some of your trend analysis, what are your thoughts? I mean, you got the signal, we broke. Are you confident?
Yeah. Oh yeah. So here's the scoop. we've been talking about this for a while, and looking at this technically, this latest move, if you remember, we had about a 2.5 week stall there. And so when you stall, when the overall trend is, going up, it means that you go from your ascending level of resistance to your ascending level of support, which is what we did by stalling for 2.5 weeks. And then any move up from there was just along the level of resistance. Here's what I want folks to think about. Think about if you took this trend. Let me look at the whole trend here. So I'm going to look at 6 months of trend, and imagine, just turn your head a second and look at this uptrend as if it was a horizontal trend. And if you turn your head a second and look at it that way, you'll realize that it's not really trending at all. It's consolidating the way that a pending breakout would consolidate. If we saw this price action in a horizontal trend, it would be considered the textbook break. So the fact that we were just barely making enough price appreciation, yes, the headlines were saying we were making new highs, and indeed we were, but we were being pushed up by the tide of the trend rather than actually having some, motion that brought us up to this ascending level of resistance. On a nice channeling stock, we want to see things going up to resistance, back down to support, up to resistance, even if the channel of support and resistance is going up or down. You want to see that oscillation. And we just have not been seeing the pullback oscillations that we would want to see for a nice, healthy channel. All we've been seeing is the expansion moves. And so this whole thing, the whole book was leading us up, and I've been saying it for weeks, that we need a correction. And I think this is the beginning of the correction. I mean, this signal that we got last night after the market closed was not a weak confirmation signal. It was a very strong confirmation signal. So I wouldn't be surprised. Let me throw my rainbows on here. I wouldn't be surprised.
Rainbows,
Rainbows. That's
rainbows.
right.
Give us. Aren't you working on something on a tool with
A
the
tool
rainbows?
and a little like ebook on it. So yeah,
Nice.
you can see we've pulled back, and we got to see where we wind up lining up. This is going to be very telling. If we pull back to this magenta zone, which is just about here, let me zoom in. This is dumb. I don't want you to have to stare at this tiny little screen. Here we go. If we pull back and find our bottom in this magenta zone, we're finally going to get a nice, strong signal about this uptrend that we're in. We'll start to believe that uptrend more if we reverse in this zone right here. So where we reverse next is going to be big. If we pull back into the red zone, well, then it's quite possible that for the next, weeks, if not months, that we kind of get stuck in a sideways choppy kind of market, right? If we start to dip down below this red line here, which means we dip down below this bottom reversal from the previous, end of June, if we dip down below here, well, now we're starting to get into what we call trend reversal territory. And ultimately, if we wind up, you know, below $5,868, you could round that to about 5,870. If we start to play around below that level, again, it's time to think about, take your risk off, put your money back into your mattress, or go bury it in the backyard because it looks like we're in correction territory. So we're going to watch where we find our bottom reversal, because it could mean anything from, reinforcing the uptrend to, hey, we're going to, stay in this sideways motion for a hot minute, to hey, it's time to go think about all different strategies. Let's start shorting the market.
Yeah, and so you got your signal here. And then you also got a signal in the VIX, both kind of coinciding and almost confirming
Well,
each other.
we've been saying for almost a month and a half now that we wanted to apply our VIX trade. And on the VIX trade, I like to use this other of our free indicators to tell me when to put it on. It's called the Fast MACD. I got a signal for the Fast MACD on Tuesday, but on Wednesday I did not get the follow through. So remember, everybody, I'm an end of day trader. I look at my signals after the market's closed, and if I get a signal, it's in the subsequent trading days that I actually try to place the trade. So on Wednesday, it didn't make sense. The follow through that's supposed to come on a signal was not there. But yesterday, that signal was there. And so I have a question. And if you want to type it into the comment section or the chat section of this video, I'd love to know who put their VIX trade on yesterday. Because if you did, you're one of the happiest campers today, because it's already as if our VIX trade is profiting for us. So you could even try to be putting the VIX trade on today, but I think you're a little bit late. Our signal told us on Tuesday. Our follow through came yesterday. I put my VIX trade in the afternoon session of yesterday's trading session, and today I'm kind of counting my my blessings. I'm very happy that I had my VIX trade installed.
Yeah, anytime I saw the VIX at that 15, I'm like, oh, I wonder if AJ pulled the trigger. I wonder if he pulled the trigger. And then I saw it up today, almost 28% today, just off of the morning open. So yeah, if you guys are in that VIX trade, kudos to the team. All right, so then you're in this. People are buying options, but we still have earnings coming out, right? We still have a couple more weeks of that, and we'll review.
I got 3 of my earnings trades that I really want to dissect for you guys.
Yeah, so we'll do that here in a moment. We're gonna take a break because
I gotta catch my breath.
Like you said, there's a lot going on. There's a lot going on in the market, and seeing as it's August 1st, I mean, this is just me putting on my guesstimating hat. If a China deal comes in the works today, could that really put a wrench into this pullback?
Yes.
Because I know in the past that was a big major market mover. So we'll see. All right, folks, like AJ said, we are streaming live. So if you did get in that VIX trade, let us know. Otherwise, let's go ahead and give everyone access real quick to your quick links. AJ did mention some of those cool tools, cool tools for you to maximize your investments. Head on over there. We got this free indicator suite. We've got access to all of our social channels. We've got AJ's free workshop, which is going to give you some of these premium selling strategies, not so much on the earnings, right?
Yeah. Although I have to tell you, even though we've got about a week and a half, maybe 2 weeks left of some of these earnings trades, the premium selling trades yesterday in our premium selling workshop, the folks threw so many tickers at us. There's so many candidates ripe for premium selling. We're back into that phase again.
Perfect. So if premium selling is a new concept to you and you want to learn more, here's that link. Register for the free workshop. We've got information about joining that Thursday session at Trading Trainer, and then some one-on-one coaching. So show some love, head on over there, get the information that you need. We've got a ton of tickers that we're going to run through. We're going to run through those earnings plays. We've got AJ's pick of the week, and we've got our speed round. What a way to start August. Exciting stuff. Hopefully you guys are taking advantage of it. We're going to take a short break. We'll be right back. Sit tight, folks. We've got some opportunities to show you. So we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, we've got three names, but before we dig into those, you know what I was surprised at with the Meta earnings?
Yeah.
As an advertiser, year over year, their ads are costing 9% more. So they're definitely making more money now. So I'm wondering if that's the case with some of these other names. But the name from 2 to 3 weeks ago was BBWI, if we want to get started there first.
Well, now this was not an earnings play. This was more of Bath and Body Works, a textbook premium trade. All my folks that are doing this trade with us are so stoked right now because we featured this on this show and told everybody that they should be thinking about Bath and Body Works. And it was back in June, and we said, hey, you should either be buying the stock or buying a substitute option. And then we got that clear, I mean, it was irrefutable, this signal that we got at the end of the day on July 11th. It was only about what? About 3 weeks after we purchased the stock, we got this clear signal to sell premium and buy protection. And we went ahead and did that. And depending on what premium, some folks sold the premium that literally was going to expire a week later. Other folks sold premium if they were using weekly options. They sold a couple weeks out. A lot of folks sold the August option, right? Where we've got August, I believe it's August 15th this month that we're going to get options expiration. So they sold the August 15th. No matter which one you sold, we had a double top form. For folks that did go ahead and get their premium expired worthless, they sold another batch. So whether you used you cruised through this because you already had premium sold, or if you sold a second set of premium, now it's coming down. Our protective option is appreciating. Our premium is cashing in. I mean, Bath and Body Works, every person in my program who traded Bath and Body Works on our recommendation is just tickled pink. This is going to turn out to be one of those symbols that we're going to most likely be able to, siphon income off of every reversal for probably the next 5 or 6 months.
And definitely talking about this one. Yeah, for about
Textbook.
4 or 5 weeks. Second name, I believe we reviewed this either last week or the week before. And that is Key Bank, ticker symbol KEY. This was an earnings play.
Yes, and Key, I don't have it as one of my examples, but Key is one that we all did well on. Key and Visa are two that I don't have on my. I've got some examples for you, Sip, that I can go through that I actually dissected. We may not actually have time to do that this round, but I've got some examples. And Key is one of those. Look, Key hardly moved for us the day after earnings. That means that our volatility crush trade worked perfectly for us. And every time one of those volatility crush trades worked for us, depending on, whether we had a bias or not, it was anywhere from like a 10% all the way up to like 50 to 70% return just overnight. No worry about pattern day trader, having to qualify to be a pattern day trader or anything like that, because these were overnight trades. Totally a cool set of trades.
Awesome. Key Bank. And then we went over the VIX. All right, cool. So those have been looking good. And like you said, options expiration is on the 15th. So does that mean that you're pretty much just kind of waiting till then to see if you can maximize your profits? Or if you get enough in the money, well, I guess not on Key, but on the BBW, is that when you hold till expiration?
So this is what we're going to do with BBWI. So already, we sold options that are up here at like the $35 strike price. And as you can see, we're trading down here at 28 bucks. So already we've made our money. Those options that we sold are pretty much close to, maybe a dime, even if they expire out on August 15th, because the underlying symbol has moved down. that if we were to buy to close, so we sold those options. If we were to buy them back now, we could probably get them for about 80%, 90% of we made off of them. We wouldn't have to pay very much to get them back. We're going to let this go lower, right? And if we get a bottom signal, we'll come back and we'll check and we'll see if anybody wants to buy those options or wants to sell us those options that we sell them back to us, those options that we sold for pennies, because then we can close out that trade. At the same time, we put these protective trades on. We bought puts that have a strike price around 25 bucks, and we bought them for like pennies. Well, now they're worth like 5 times that amount. So the combination of having the premium trade now pretty much ready to cash in and having our protective option appreciating in value, I mean, that's all just adding up as 2 times the return. So, yeah, we'll wait for the next reversal signal or we'll wait for August 15th, whichever one comes first, and that's when we'll roll out into our next set of premium trades.
Yeah, and that's the beauty of some of these setups that you and the wonderful audience at Trading Trainer are looking at and identifying every week. Okay, so this stuff is in the rearview mirror. Let's see
Yep.
what we have on the horizon that there could be an opportunity. And this week, you're liking a boring name, an American name, Goodyear Tire, ticker symbol GT, a name we've covered on the show quite often over the 195 episodes.
Yeah, not only has it been, a mainstay of this show, it's been a mainstay of my portfolio for, the last decade plus. Goodyear Tire is a great premium selling trade. It's a symbol that you can look over here at the earnings. They tend to always give some sort of gains. They're a company that doesn't lose money. They do they provide something that pretty much anybody who has a car or they provide tires. We need them. They're not going anywhere anytime soon. At the same time, the investors in Goodyear, they're not necessarily looking for Goodyear to appreciate. They're looking for when Goodyear returns their dividends, things like that. With that said, Goodyear is coming into its channel, forming a bottom. Now, I'm waiting for a signal. I'm not going to just buy Goodyear because it's at a low. I'm going to wait for a bottom signal, which means I'm waiting for one of these, light blue arrows to form, and that'll come end of day. So I'm not going to be looking during the day for one of the arrows. I'm going to look at the end of the day after the market's closed, sometime in that evening for one of these blue arrows. If I see one of those blue arrows, I'm going to look to see if it's an opportunity the next trading day to do some buying. I'm either going to buy Goodyear Tire, the stock itself, and if I do that, I'm going to buy it in lots of 100, or I think that if you go out to June of 2026, there's a Goodyear Tire June $5 call. If we take a look really quick, I'm going to use my options lookup tool. Again, this is another one of those tools that you can get from me for free just by going to that quick links page. Just get access to it. If I pull up Goodyear Tire and see what price that option is going for, here's that June expiration. If I go for the $5 call, go a little bit deeper in the money here, look at some more strike prices. As of yesterday's close, it was going for about $5.60. So it's a little bit over half the price of Goodyear Tire. So if I want to get a little bit of a discount, and instead of buying the stock, I want to buy the less expensive option, it'll behave just like the stock. And then once I've got that in place and this thing goes up, just like Bath and Body Works, when I hit the top, probably around $11.50, maybe as high as 12, I'll go ahead and sell my premium, buy my protective option with a down here around $10, and start that ongoing money making process where all you have to do is wait for the time to pass by and you just collect the dividends each time.
It's a beautiful thing. And the
It
fact
is.
that you have 10 years of in and out really goes to show the premium selling side of investing is, kind of the long-term game. You just kind of collect the checks and it adds up over time.
Do you
Um,
remember having Fausto on our show a couple times?
of course, weren't you on his podcast this week?
On Tuesday. So it's so funny because Fausto is, an order flow guy. He likes to follow the buying and selling pressures on the stock itself, and he's very much directional. And I was just blowing his mind. He's like, "Wait, Goodyear Tire really hasn't moved up or down in price in decades." And I'm like, "I know. That's the beauty of it. That's how we make money. It's not that we're making money on the stock going up or down because I don't want to try to have to guess whether the stock is going up or down." And by the way, Fausto has a great way of looking at, when traders are piling in on stuff and he can follow on their coattails. So kudos to him for being able to follow that kind of stuff. But I like the trades where the stock just goes by and I just have this time. It's like putting your money in a CD or putting your money into some sort of thing that it's just time passing by. Mine's much more lucrative, whereas the CD is paying like what, 3% every year. I'm making like 10, 15, 20% every month. But it's on time passing by. You can't get more reliable than time passing by. That's like the most consistent thing I could think of is time passing by. I haven't been able to slow it down. I haven't been able to speed it up. It's just time passes by and you make money on that factor. So that's how we're doing it.
Yeah, and it's crazy for you to blow the mind of somebody that's so experienced and in the markets every day. And I think the differentiation is he's really looking for the moves, while your
Yeah.
strategies are like, hey, we don't want the excitement.
No.
We're gonna capitalize on the time and the calm. And with, I don't know, thousands of names to choose from, not every one of them are moving. And these are strategies that can be applied to some of these boring names and names that you have in your portfolio that are just sitting there and growing over time. So that's the beauty of options and
Premium selling
premium selling. So the link to the workshop once again is in the chat, and that's what AJ's liking this week, Goodyear Tire. But we've got 3 other names from some of our guests who think that there may be some opportunities in some of these other names, and they want to get your input, AJ. So let's run through our speed round, starting off in. Well, before we go into this, did you see the tsunami notifications and stuff coming out earlier in the week?
I mean, I heard about it on the news. I'm sure you, being in Los Angeles, were more directly affected by it than we were here in Washington, D.C. But yeah, I heard about it.
So we get I don't know, like maybe it's different in different parts of the country, but we get these notifications that are like nature oriented. Like we'll get a couple that are like, oh, there's an earthquake, and you get your phone buzzing, and so everybody's phone was buzzing, and it was like tsunami warning, and I'm like 10 miles in from the coast, but it's like, I mean, we've had tsunamis that have gone that far.
Yes.
And so you start seeing all the hoopla. And the reason that I get into this is because Terrence is in Honolulu, Hawaii, and they were really affected by the effects of the tsunami. So it's good that everyone in Hawaii and just on the coast is okay. I believe it was pretty minimal part of Russia or some island or something.
Yeah. In fact, I think that it resulted in a volcano from what I was watching on the news. So, the Earth's always been a moving and a shaking, and that's just it. I think that's the biggest. That was the biggest recorded
third or something.
8.8 on the Richter scale.
Yeah, crazy. Good that humanity was not too affected by that. But with that, it's good that Terrence is back in the markets. He wants to know, AJ, your take on InMode, ticker symbol INMD.
Yeah. So, okay, in mode, so we're thinking about this for a premium trade, and one of the things that we, think about with the premium trades is earnings, because we don't want anything like an event to mess up our boring stock. And so I'm kind of happy, Terrence, that we just had earnings a couple of days ago. It doesn't look like this stock was really, like, investors didn't drive the price. There was nothing surprising that made investors do anything different than they have been for the last 6 months. So, okay, here's what we need to do here. I think in mode it seems to need to test its support and resistance levels a little bit more, but that doesn't mean we can't, prepare for this trade. We can't plan for it. So for a level of support, we want to see that about $13.25 is tested. And that means it could be tested anywhere from like $13 or even up as high as $13.50. But around those levels, I'd like to see a bottom found. So if you haven't already, Terrence, go to my quick links page and download this fast MACD indicator. And when you install it on your trading software, here's the settings I want to make sure you've got. 6 for the fast length, make sure it's an exponential. 19 for the slow length, make sure it's an exponential. And 3 for the MACD average length, make sure that's an exponential. And if you want to put in some volume validation, switch it from calculating on the close price to the volume weighted average price. That's how we get our fast MACD to give us some pretty good signals. So what I'm waiting for here is a light blue arrow. When I get my light blue arrow, and I've emphasized it twice now, this will be the third time during this show, I'm going to be looking for it after the market's closed. If I get a light blue arrow, then in the subsequent trading days, I'm going to look for that follow through during the day. And if I get that follow through, that's when I place the trade, right? And so I could see myself wanting to buy this stock so long as I don't go below about 13, maybe as low as 12.50. So long as I get that reversal, in that range, and it's got follow through, let's buy some of that in mode stock. I would buy the stock in lots of 100 because, options are in contracts. Contracts are 100 option shares. So everything has to be done in increments of 100. So you could buy that. Let's use our options lookup tool really quick for in mode and see if there is a substitute call option I could recommend. Maybe let's see if there's anything in February of 2026. There's not much open interest. The bid-ask spreads are a little bit on the high side. Let's look at January. January is a little bit better. We have all these cool little things that we can do in analyzing using our options lookup tool to make it easier to find exactly what you're looking for. Maybe what I'm interested in, I'm not really excited. Maybe this $5 call that expires in January, you can use as a substitute, but I'm almost going to hint for you, Terrence, to just stick with buying the stock. I think that's going to be your best bet. Buy the stock in lots of 100, and then as it goes up, we're expecting it to find the top somewhere between 50 and 15.50. If it finds that top, that'll be a magenta arrow. That's when you sell premium, you buy protect, and it's called collaring the trade. And if it goes above that, if it starts to, make price gains above 15.50, forget all about the premium selling. Just look for the highest high to sell and make it a directional trade. So I think you've got something here, but wait for the signals. That's all.
Yeah, I didn't really know what InMode did, but I guess they make like cosmetic medical devices. So maybe not so much of a high flying industry. So
boring. That's what I like.
That's the take. Hopefully you're staying safe there, Terrence. Moving on to our second name, Sylvia out of Boise, Idaho. This is a new one that I'm gonna have to look up. Bungie, ticker symbol BG. No
Yeah.
idea what this company does.
Food. They're
Food.
Bunge. They're one of the big, they're ag. They're up there with ConAgra and stuff. So okay. Again, I like Bunge. Bunge has been in my portfolio also probably as long as Goodyear Tire. They've gotten a little bit expensive over the years. If you go back a few years ago, I'm going to go back, let's go back about 2 years. Well, they were up even higher 2 years ago. I think they actually had a big gain in price around the COVID time. Yes. Because for the most part, they trade around 30, 40, 50 bucks. Right now, they're up 70, 80 bucks. But yeah, they're more of a defensive play. But the scoop is they're boring, right? And that's what I like about them. They produce they produce something that we all need, but it's not got like the AI moniker on it or something like that, right? It's not a robot. It's literally spinach and food brands, the stuff that we consume. So with that said, let's see. We found a bottom. See, here's my light blue arrow. We found a bottom the evening of July 18th. We got follow through on July 22. That would have been the perfect time to either buy some of this stock or if there's a substitute option to buy it. It keeps having these interesting flag patterns. This is a flag pattern where you can see this bar right here was the flagpole, and then it kind of consolidated into a point. And usually you get 3 of these flags in a row if you're a pattern analysis person. So we're in the second flag. We probably will go up again. Here's what I would do. I'm expecting one more push up and probably a top found anywhere between about $84 and even as high as $86, $87. If we get that top found, I think we might be interested shorting Bunge just in the short term, right? That means I'm either going to short the stock again in lots of 100, or I'm going to look for a substitute put option. In fact, let's use our handy dandy options lookup tool. We'll type in the ticker symbol Bunge. My substitute options, I like to go kind of farther out in time. So we'll look at the January 2026. And now I'm looking on this right-hand side of the chart, looking for put options. And maybe I'm interested in, I kind of wish I was interested in this $100 strike price, but the bid-ask spread is kind of large. I'm probably more interested in this $95 strike price. You could use this as a substitute to shorting the stock. And what's nice about using this put option as a substitute to shorting the stock, besides the fact that it's only $16.65 versus $80, right? It's that you don't need to have a margin account. You don't have to actually short anything. Buying a put option, it's a cash trade, and the put option appreciates when the stock goes down, just like shorting the stock would, but you don't have to do any funky like borrowing of stock, selling it high, and then buying it back low. You just buy the put option. So I kind of am slanting towards that, the January $95 put. And then once you've got that in place, let the stock drop, let your position appreciate. And when you find a bottom, instead of selling call premium, sell put premium, buy a protective call with the strike price up here at 85, maybe, up here in the 80 to high 80s. And you've done the same thing, only you've flip-flopped the whole equation. See, we could do that with our option strategies. We don't have to just make money with covered calls and bull diagonal debit spreads. We could do it with covered puts and bear diagonal debit spreads. It works either way. We just make money on time passing by.
Yeah, and talk about boring legacy. I'm going to throw out a trick question for you. What year do you think Bunge was founded?
Oh, maybe 50, 75 years ago. What's the answer?
1818.
Yeah. It's been around since, I mean, food. I'm telling
Yes.
you, we've always had to eat.
Soybean, food processing, grain trading, fertilizer, based out of Missouri, actually. So thank you for that, Sylvia. Nice little boring name for us to review. Our third and final name comes from your neck of the woods, AJ Ish. Christy out of Columbia, South Carolina,
Yeah.
interested in CMEX, ticker
Oh,
symbol CX.
yeah. Cement. Um, okay. Hey, Christy, I don't know how long you've been following us. I don't think that this is a premium trade, but what I do think this is potentially a swing trade. Here, let's take a look really quick. I'm kind of doing in my head where this trend started, and it looks as though right here at this low close is when this current trend started. And so check out what I'm about to do here. I'm going to throw onto my chart a 30-day simple moving average. There, let's try that. Simple moving average. And I'm going to make it 30 days. And what I want to see here, for any sort of swing trade, you have to make sure that there's an established trend. And so here's the 30-day simple moving average. And I want to make sure that it's running roughly parallel to this best fit trend line that I drew from when and if you come and look at some of our programs and stuff, we go into the actual details. The trend looks solid. The trend looks, it's a little bit, you know, up and down, but for the most part, the 30-day is agreeing with the trend line, and so we can check off the box that says we've got a strong enough trend to support a swing trade. So now that you've got that established, the next thing we're going to do is combine a leading indicator with a lagging indicator. The leading indicator is going to tell us whether or not our swing trade has pulled back enough to give us a good swing trade. And then the lagging indicator is actually going to be our trading symbol. So here's what I'm going to recommend. Throw the Williams percent R on. Make sure you do these settings, because for some reason, charting software companies have been like catering to day traders. They've kind of been messing up with the default settings. Here's what you want. Williams percent R, we want it at 14, -10 for the overbought signal, and -90 for the oversold signal. Just like that. All right, that's our leading indicator. And for our lagging indicator, the one that's going to give us our signals, just download my indicators. Here's what we're going to do. We're going to use our confirming indicator MA, the one that you can get from us. Change the fast length to 1, make it simple. Change the slow length to 7, make it simple. Keep everything else as no. And now, apply. You've got the perfect swing trading template. So here's what you're going to do. You're going to watch the Williams percent R. When it goes below the lower line, then you're going to look for a green arrow. When you get the green arrow, trade it in the bullish direction. In other words, use either buy the stock, or use a call option. Maybe go 3 months out, couple of strike prices in the money. You can't go wrong. And then as soon as you get the red arrow, sell it, take your money, send me a message, tell me how cool I am, tell me about your returns, have me feature you as a success story on my swing trading template.
For sure. CMEX. These guys are out of Mexico.
Yep. They're cement, right? Uh-oh. What happened? Hello. Oh, I think that I'm still live. I think maybe Sip disappeared. Is that right? Well, guys, my co-host I think has fallen off the uh uh interwebs over here. I hope he's okay. I hope it's not like a tsunami or something like that. But in the meantime, I think that's the end of our show. I didn't get a give you I didn't get a chance to tell you about, go through some of our symbols that we had done earnings trades on. But I also would like to add to those ones that I did earnings trades on. I'd like to add the Visa and the Key. So let's put a thumbtack in that for next week. I'll put together a much better kind of presentation rather than just showing you my actual trade log. I'll put together some easy to see slides. I'd love to take a few minutes during this call in order to show that to you. So if you can make sure you're here next week, that would be great. Otherwise, I hope you all have a fantastic rest of your week. I know things got cool here yesterday in Washington, D.C., so it's not going to be as hot and blustery. Earlier in the week, we were having record highs and it was humid and gross. So I hope you have some good picnic time this weekend, and I hope you're thinking about and preparing for some of your trades. If you still got some earning trades, that's great. Otherwise, swing trades like we have on that CMEX, or uh, the just I'd love again to hear how many people put the VIX trade on. And let's get back to some premium selling for the rest of the time and pay attention to those news headlines. Man, this week was great for all the different news headlines if you like that. Thanks, everybody. And I'll talk to you guys later. Take care, everyone. Bye.